Hey everyone, welcome back to Corporate Decoder. Today we're diving into a juicy corporate filing, and let me tell you, it involves mergers, acquisitions, and enough financial jargon to make your head spin, but don't worry, we will make it make sense. Think of it as corporate matchmaking with a side of debt and obligations. Before we start cracking into these corporate shenanigans, if you appreciate clear insights from SE filings, subscribe to Corporate Decoder. We also have a Discord server linked below discussing these topics and more. Join the discussion. Today we are looking at a Form 8K filing from Redfin Corporation. Now Redfin, the real estate company, has officially been acquired by Rocket Companies. Rocket, you might know them better as Quicken Loans. This report details the nitty-gritty of that deal, the end of Redfin as its own company, and the financial obligations Rocket is taking on. This report is dated July 1st, 2025, marking the official completion of the acquisition. This is important because it triggers a bunch of changes to Redfin's finances and its stock market listing. As it says here, Redfin entered into a merger agreement with Rocket Companies back in March. The goal was for Rocket to buy Redfin, making it a wholly owned subsidiary. On July 1st, 2025, the deal was finalized. Think of it like buying a house. You close the deal, get the keys, and now you own it. One of the first big things mentioned is how this merger affects Redfin's existing debt. Redfin had convertible notes, which are basically loans that can be turned into stock. Rocket is now taking on those debts. Think of convertible notes like this. Imagine someone loans you money with the option to be paid back either in cash or in stock. If the holders of these notes want to convert them to stock, they will now receive Rocket Company's stock instead of Redfin stock. For every $1,000 they invested into Redfin notes, they invested into Redfin Note 2 shares of Rocket Class A common stock if they choose to convert. Same thing for the other notes. Now, here's where it gets interesting. Redfin is now guaranteeing some of Rocket's debt. This means that if Rocket can't pay back some of its loans, Redfin is now on the hook. Rocket had $2 billion in notes due in 2030 and another $2 billion in notes due in 2033. These Rocket notes are guaranteed by Rocket Mortgage and some of its subsidiaries. And there's a future acquisition in the works with Mr. Cooper. If that deal happens, those notes will be then guaranteed by Mr. Cooper as well. It's layers of guarantees like a financial safety net, or at least what they hope to be a safety net. There's a catch. If Rocket doesn't complete the Mr. Cooper acquisition by September 30th, 2026, then some of these Rocket notes will have to be paid back early. And there is also a special mandatory redemption if within 45 days of the Mr. Cooper acquisition, some of the money isn't used to redeem certain of Mr. Cooper's existing senior notes. So there's money in the air that needs to be used correctly or things get messy. These notes due in 2030 will accrue interest starting in June and will be paid twice a year, in February and August, with an interest rate of 6.155% per year. The notes due in 2033 will also accrue interest starting in June and will be paid at the same intervals with an interest rate of 6.375% per year. There are some options for Rocket to get out of paying back these notes early. Before August 1st, 2027, Rocket has the option to pay back these notes plus a premium. After August 1st, 2027, they may also pay them back early based on the prices set in the agreement. Rocket also has the option to pay back these notes using money from a stock offering, but there are limits of how much they can redeem this way. In theory, there are restrictions in place to limit Rocket's ability to take on even more debt or sell off all their valuable stuff. These restrictions have a number of loopholes. Again, in theory, if there's a major change of control at Rocket, they have to offer to buy back these notes at 101% of the value plus interest. Redfin also guaranteed Rocket Mortgage's notes. These include notes due in 2028, 2029, 2029, 26, and 2033. The 2028 Rocket Mortgage notes bear interest at a rate of 525 F on Aero EMEA. A portion of these were previously repurchased. The 2029 Rocket Mortgage notes bear interest at 3.625% semi-annually and impose restrictions on Rocket Mortgage's activities and potential change of control scenarios. The 2031 Rocket Mortgage notes bear interest at 3.875% payable twice a year. Like the previous notes, these are also unsecured and have change of control and event of default restrictions. With the merger complete, Redfin is paying off all its debts under its first line term loan facility with Apollo Capital Management. The loan facility will then be terminated. On July 1st, 2025, the merger was finished. Redfin is now a wholly owned subsidiary of Rocket. Each share of Redfin stock has been converted into 0.7926 shares of Rocket common stock plus some cash. Any outstanding Redfin stock options or restricted stock units get converted into Rocket stock options or units. Redfin notified Nasdaq that the merger was done and asked them to stop trading Redfin shares. Redfin shares are no longer listed on the Nasdaq. Redfin will also ask the SEC to deregister its shares, ending its reporting obligations. The old board of directors of Redfin is out, and Brian Brown and Varun Krishna have been appointed as directors of the company. Redfin's certificate of incorporation, basically, the rules of the company has been changed to align with the terms of the merger. Also, the bylaws of merger sub the company. Rocket used to do the merger, now become the bylaws of Redfin. Now, let's step back and look at the big picture. Rocket Companies now owns Redfin and its debts. What does it mean? One of Rocket's strengths is its established brand and customer base in mortgages and financial services. By acquiring Redfin, they are trying to integrate real estate services, aiming to create a one-stop shop for buying and financing a home. Redfin brings a technology-driven approach to real estate, but it also comes with its liabilities. Can Rocket successfully combine these two companies, or will they clash? One of the notable risks is the amount of debt Rocket is taking on, especially given the uncertainty in the housing market. Think of it like loading up on expensive groceries when you are not sure if you have a job next month. The Mr. Cooper acquisition is also something to watch closely. If that deal falls through, it could trigger some early debt payments. In conclusion, this acquisition is a big bet for Rocket Companies. Great potential for synergy and growth, but there are notable risks for a lot of new debts. Whether it pays off remains to be seen and will depend on how well Rocket manages integrations and navigates the ever-changing housing market. Alright, that's our breakdown of Redfin's acquisition by Rocket Companies. What's your take on this deal? Drop your thoughts in the comments. If you found this analysis valuable, please hit the like button. Don't forget to subscribe for more dives into the world of corporate finance. Also, don't forget to check our Discord in the description where we talk about these topics and more. Thanks for watching and see you next time.